crops and livestock, looking at financial tools, budgeting, trying to make things easier for producers to look through financials and help wherever I can. I'm filling in for John Hewlett today. John had an unfortunate change in his schedule. So this is John's slot. I'm going to be doing a portion of his presentation. And feel free to stop me anytime we go through this. And this is part of a project John's been working on or been part of for a long time. And it's all tied back to, you see this brand down here called Right Risk. It's one of the tools that he has helped develop that deals a lot with risk management, budgeting for operations, and things of that nature. And so we're going to kind of go over some of the basics of what makes up an enterprise budget, and then it kind of ties back into encouraging you to go to Right Risk or any other enterprise budgeting tool. And I think his title here kind of starts it, how to begin or where to begin. I've helped teach a couple classes at Eastern Wyoming College, some financial classes, and I always told my students the hardest part is starting. It's just like your taxes or anything else. The hardest part is actually sitting down and trying to get started. It can be very intimidating, but hopefully as we go through some of this today, we'll make it maybe a little less intimidating or give you some confidence to go and get started. So we're evaluating enterprises and evaluating financial performance. So we're going to talk a little bit about what constitutes an enterprise as opposed to like a whole farm or whole ranch operation, and kind of how to look at some of these. So these are some of the outputs from the Risk Analyzer tool in Right Risk. So basically he's showing, given certain inputs, given certain prices, what potential profitability or break-even numbers or probabilities are going to be for your operations. So these are just some of the charts that those tools can spit out to help you kind of hopefully make decisions in your operation. So he's got break-even yields for cash expenses, probability of net revenue listed, probability of net cash income listed. So all financials for a potential business enterprise. This is another one, maybe a typical way to look at returns over cash costs or total costs. At what point is this operation gonna produce more, produce less, stop producing, or what point is this operation profitable? He's got just, it's kind of a pretty chart where returns outweigh total costs. That would be ideal scenario for your enterprise in this situation. No background information, but some of the charts that can be produced with some of his tools. Okay, another thing that John had in here, he had some survey questions. We tried to get the survey tool to work. If you're okay with it, as part of his grant requirements, he has to keep track of certain survey questions so that they can continue to hopefully identify questions that producers have and how to kind of focus questions in the future. So his first question here, have you been involved in farming or ranching for less than 10 years, or are you ready to begin? So I might, there's a marker, not a marker.
I'll get you one.
Okay. So if you're okay with it, by a show of hands, have you been involved in farming or ranching for less than 10 years, or are you ready to begin? Is anybody yes? Less than 10 years? One? No?
What about more than 10 years?
Yeah, that's the next question. So I've got one yes, one no, and then I'm not sure. Everybody else, I'm not sure, maybe. I'm not sure. Okay, that's fair. Okay, so have you owned a farm or ranch? have you owned a farm or ranch for less than 10 years? So owning or is different than being involved in agriculture, so he's trying to get at,
Oh, I didn't help.
you know, the difference between ownership and participating or maybe being in the agricultural field, maybe in a direct or indirect way, I guess.
The dead? Try the other one. I got more.
Someone said one, so I've got a Y, and I've got no, got a, not sure. So for survey question 2, have you owned a farm or ranch for less than 10 years? So any, I guess, would be considered, you know, short term or less than 10 years. I've got 1 yes. Probably the rest no, I would take it. Okay.
Is a horse operation considered farm or ranch?
So we're gonna get into this because I would consider.
Mixed feelings about that.
Because I would consider that a separate enterprise as part of an operation. So technically, in my book, that's probably an enterprise. So,
Okay.
yeah. So you're yeah.
So I guess I'm a yes.
You're yeah.
Change me to a yes.
Okay. So I've got, I guess, go, yeah. Which is, that's not alright either, but. So. 5 no's. Okay, not
So
sure.
if you've owned for more than 10 years, you're a no.
Correct. Correct. Yeah. Okay, thank you. There will be a few more, don't worry. So as I mentioned, as part of his grant process, they try to identify future questions that they can maybe identify and create programming or develop another tool that maybe helps. So maybe one of these tools they develop for beginning farmer ranchers versus, you know, intermediate or long-term or whatever, so. Is there a problem? I don't really know. I don't really know if there's a problem. I think, as I mentioned in the first part, if we're talking about an enterprise, I think the main problem is getting started or understanding maybe what constitutes an enterprise. These are some of the enterprise budgets we have created for the Bighorn Basin for Wyoming, and they're available online if you want to reach out to see them. There are also a lot of other, you know, livestock and sheep and other crop enterprise budgets through the university system that you can look at. But we're gonna break down what constitutes some of these enterprise budgets and kind of go through some of the terminology. Because there's a survey question later that talks about, one of the questions is, you know, what's the most confusing or hard part about enterprise budgets, and one of them is terminology. So if we talk about some of this, hopefully we can clarify some of these questions. So some of the terminology, as I mentioned, an enterprise is an activity or process engaged in or by a business that has some element of risk and uncertainty, which generates one or more saleable products. So when you think about a farm or ranch operation, typically they're gonna have more than one enterprise. So on a farm or ranch operation, maybe it's a combined, you might have an alfalfa hay operation, and maybe also you have a farm flock of sheep. So those would be separate enterprises. And really, if you really wanna get into it, if you, maybe have horses, maybe you, raise mutton busting sheep, maybe that's part of your sheep enterprise. That would be technically a separate enterprise that you could create its own budget for. So, a process in a business which has some risk, which we all know, agricultural heavy risk, it can generate one or more saleable products. Okay, this next question. Have you previously completed analysis for one or more of your enterprises? We talked about what maybe constitutes an enterprise in an operation. Has anybody ever looked at or analyzed one of your enterprises? Thought about it? In
No.
tax time, maybe?
Doing taxes, yes.
Yeah,
Every time I pay a bill.
every time you pay the bill, yeah. So I've got a bunch of no's.
I never
I'm
completed
assuming
one.
doing a budget and figuring out your cost versus what you're bringing in would probably be analysis
analysis, correct?
Yeah, absolutely.
Yeah.
Okay, great. Okay. Alright, so this is kind of what I was talking about here. So we've got our farm and ranch operation that can be made up of multiple enterprises. And it's kind of confusing, right? Because some of them overlap a lot of times. I don't use my pickup just for my sheep enterprise. I use it for my personal life, I use it for recreation, I use it for a lot of things. So a lot of them kind of overlap, but there are a lot of certain individual costs to each of the enterprises that can be broken out, which then translates to the whole farm or ranch profitability or revenue costs. So how do we look at or think about enterprise profitability? The whole farm, the main overview, the picture that's made up of all the different enterprises, is derived from enterprise profitability. So one enterprise may be profitable, but another may have only marginal profitability or may have costs greater than returns. And as I mentioned, that can be a little confusing because maybe we produce alfalfa hay to supplement our sheep flock. So maybe we're selling our alfalfa hay at a loss to support our profitable sheep enterprise. Just an example. So an enterprise budget, like we talked about, is a projection of returns and costs associated with a specific enterprise for a specific period of time. And I think important terminology in this is specific period of time. So in an agricultural setting, we think about a lot of our enterprises on a yearly basis. So we think about fallow crop ground over the winter, planting corn in the spring, irrigating corn all summer, harvest in the fall, and then fallow over the winter. So that would be our enterprise budget specific period of time. Some things don't fit that criteria really, right? So whether you have stalker animals on a national forest lease, that might be a little bit different period of time. You've got a specific period of grazing lease that you're not allowed to be in there. So do you count that in your enterprise budget? Or is that just a cost associated with owning that national forest lease? So an enterprise budget layout, in pretty basic layout. So you've got returns, so you've got some cash returns, some non-cash returns. You've got enterprise costs, cash costs and non-cash costs. So essentially your overall layout is enterprise returns over cost, which would give you, the profitability of your enterprise. Cost of production estimates for an enterprise. So any coherent portion of the general input-output structure of the farm business that can be separated and analyzed as a distinct entity. Such an entity uses inputs and incurs costs while producing products or services. So kind of what we talked about, the setup for an enterprise. We are going to be producing something with some amount of inputs and some amount of costs, and hopefully make a revenue at it. So enterprise returns can be defined as, it either describes the yield or price received, and total cash income per acre for each enterprise product produced.
Brian, can you go back to the last one? So an enterprise could be something that you want to spin off as a separate business as well?
Yeah, and ideally you'd have a separate enterprise budget for each specific part of your operation. Whether it is the mutton busting, whether it is your alfalfa hay operation, whether it's whether you sell maybe sell breeding animals, something like that. That would be a separate enterprise. So that's where I said some of them kind of overlap. So if you had a sheep operation, but you also sold breeding animals, that technically should be another enterprise in that operation. So like maybe you've got your farm plot, but then you've got your breeding animals as well. So you're gonna have separate costs, so one question I always like asking, does anybody know the top 2 costs of any livestock budget? So when you're thinking about what goes into raising livestock, whether it's sheep, whether it's cow-calf operation.
Feed and fuel.
Feed.
Feed and health cost.
Fuel.
Labor.
Yeah, for me, it's feed
Oh, we
my
don't
energy.
count labor.
Labor's not a cost, that's a
free.
life calling.
And
Are you
that
saying you
is,
don't get paid
Yeah.
well?
That's the pro, yeah.
the reason I say
Do
that,
everything.
and the reason I say that is because we only have limited time, right? Like, we're one person on an operation, or maybe you hire somebody in your operation. That's a huge expense. If you're paying somebody to go out every day and feed, maybe it's you, your time is worth a lot. And a lot of times we don't consider that in a budget. It's just, I do it because that's what I'm doing. But what's the alternative? What's the alternative to our time and our labor costs?
Hiring
Hiring
someone.
somebody.
Because I can go do something else. Maybe I got a job offer. I can go make $80,000 in town. That's the trade-off. So what's your time worth? So to be fair, in all these budgets, your time needs to be in there, your labor.
Yeah, and that's a good point. So like, I guess where I'm coming from is, I'm looking at, maybe starting, a custom hay business with my son. And right now, probably all he has to offer is time,
Yeah.
cause he doesn't have any equipment or any property or, so there I could see in the beginning, that's gonna be important. If you
Yeah.
spend the time,
Yeah.
swathing or whatever.
Yeah. And so like a haying operation, custom haying operation, so you're probably working the majority of your time during the summer, probably some in the spring and winter, maintaining equipment, something like that. That's all labor, that if you weren't doing that, you could be doing something else to make money. So, to be fair, those labor costs need to be in any budget. And so it kinda gets confusing, right? Cause we all know on a farm and ranch, we just do one thing, right? I just have my haying, I just have my haying enterprise. We know that's not right, okay? We've got your upkeeping fence. So what enterprise relies on that fence? Maybe your cattle enterprise, maybe your sheep enterprise. So your time is split a lot. So, in a lot of these enterprises, if you're the sole operator, you're gonna have to find some percentage of time you spend in your sheep operation, your stocker operation, whatever it may be, and account for your labor. It's an important part of it. And in a lot of budgets, labor is not included in a lot of budgets, but it needs to be.
So what do we pay ourselves then, Brian?
That's a good question. Well,
$5 an hour?
Yeah.
50 cents an hour is not so true.
Depends how good you want your budget to look, right? Well, I've said for a while, and I just kind of mentioned it, one way to do it is, what else could I go do, and what could I get paid to do that? So there's a trade-off there. So if I can go to town and make $40 an hour, it better be at least worth $40 an hour for me to work in my sheep enterprise. Right? There's a trade-off there. So, it's one way, or what you would pay somebody to do what you do.
That's, yeah.
What do you pay a farmhand these days? Can you get away with $15 an hour?
I think that depends on what skills they have, what specialization they have. If they're building fence for you all summer,
Certified welder?
certified welder's gonna be different, yeah.
Yeah.
If they know how to run GPS equipment, their skills are worth a little bit more probably. If they're a, low stress livestock management expert, they're gonna be paying quite a bit more. So it just kinda depends. I can lead you to, Bureau of Labor Statistics has, ag labor numbers, but they to me, they look awfully low, but, so, just depends, I think, on how skilled the labor is. So, cause I mean, they're gonna have different skills than what you might have, your background, so. It's hard to be competitive, I understand that right now, I mean, people can go make pretty good money about anywhere, really, so. Okay, so enterprise returns, typically, when we look at enterprise returns, it's in a, dollar per bushel, dollar per acre, dollar per head return, whether it's, depending on what enterprise it is. If you had a mutton busting flock, you could say maybe dollar per, county fair, that'd be kinda cool. Just depends on, income for each enterprise product produced. Enterprise costs, a description of the various operating and ownership costs involved with the production of a particular product. So can anybody tell me the difference between operating and ownership? When you're talking costs? Any guesses?
Well, operating would probably be like your electricity or your feed, and ownership would be yearly taxes or license and
Exactly.
permit,
Payments.
Yep. So operating,
mortgage payment maybe.
yep. So operating you might more commonly see as a variable cost. So these are costs that are gonna be incurred as we produce that unit that we're doing, whether it's, tons of alfalfa, or number of head, or, each individual animal. So these are things that costs we're gonna incur only if we produce something. So, other things, ear tags, vet costs, feed, labor. Again, feed and labor are gonna be your two biggest variable costs going into it. Fuel and lubrication for equipment, and then any interest on operating inputs. So, if you have borrowed money, that technically is a variable cost because, you needed to borrow that money to produce something. So operating inputs, these are gonna be items purchased and used in the production of the enterprise product. Fuel and lubrication, we talked about that. Gasoline, taking your pickup to town to get the oil changed, filters, grease for your tractor, grease for your swather, and the necessary labor for fueling and lubrication machinery and equipment used in the production of the enterprise product. And there are numbers out there you can go find. Typically, it's broken out in a budget, so there's like a labor portion, and there's, fuel and lubrication, based on the number of hours you're using equipment. Repair and maintenance, a big one, obviously. We'd all like to have brand new equipment, but we also know brand new equipment all the time doesn't necessarily work like we need it to. Maybe the GPS unit on your tractor is malfunctioning, and you have to have the John Deere dealer come out and work on it. Things don't last forever. These repair and maintenance inputs need to go into our budget as part of that enterprise. If I use my tractor only for my haying enterprise, strictly for that, all repair and maintenance would go into that haying enterprise budget as input costs. Labor, we talked about this, charges for day labor, hired labor, and owner-operator labor needed for the production of the enterprise budget. As we all know, nothing's gonna get done if there's not labor. Maybe in the new AI world, that's different, but there's gonna be labor and maintenance for those machines, maybe, so, labor is important. We need to account for our time, because your time is valuable. You've got things going on, you've got other things that you could be doing if you weren't working in your enterprise. And then interest, spelling here, on operating inputs. Interest charges resulting from borrowing operating capital for the purchase of operating inputs used in the production of an enterprise budget. So maybe we borrowed money to lease a tractor or to buy 10 used or something like that. We have to include the interest on that operating input. So now we get to the ownership cost. You nailed some of them really good. So fixed cost. So these are costs that we're gonna incur whether we produce one unit of whatever we're doing or not. Okay? Things that won't change. Taxes, we all know that. Insurance on the operation, insurance on your vehicles, tractor. Housing, you're still gonna live there whether you're running sheep out the back door or not. Insurance, depreciation. Depreciation can be kinda tricky, but we're talking about that, from an equipment standpoint, but also, did anybody know animals are depreciable? Yeah?
By their age.
Yeah. Yep. So,
Brian, what about, so housing, what if you're using, housing in lieu of, labor payment for somebody?
so you have a hired person working for you, you're providing the housing, and they probably work in multiple parts of your operation.
Yeah, I mean, actually, it's like, it's children right now in my mind, but I mean,
Yeah.
it's just like, that's worth something. I
Yeah.
mean, you're in between jobs, living at our place, you're working on the operation to pay for your
Yeah.
room and board type thing.
Yeah.
I mean, I guess there's a value to it,
Mm-hmm.
whether you can keep track of what,
Yeah.
because they're in both different categories, I'm just wondering how you keep track of
Yeah.
that.
Well, there's probably gonna be a difference there, so if they're working for you and this house is part of your agreement with them, they're probably, I'm guessing their salary is probably gonna be adjusted to show for that,
Okay.
I would imagine.
Mhm.
So you're gonna make that up, so you're, maybe trading off, variable costs for fixed costs.
Okay.
I would say, cause that house is gonna be there whether there's anybody in there or not, right? Maybe the utilities are gonna be a little bit different, but, you're still paying insurance on that house and taxes on that house. So I think the difference is gonna be between your variable costs and your fixed costs in that situation. And that would show up in the budget both as costs.
Okay.
Taxes, personal property taxes charged on the assets owned by the farm ranch, which are used in the production of enterprise products. So what about if you lease all your ground, you don't own any of it? What would they be? What would leased ground be compared to?
Your rent payments every month.
Yeah, so it's gonna be a variable cost, right? Because if I don't rent that ground, I don't incur the cost. If I don't need that ground because I don't have any animals. So rented land is gonna show up as a variable cost versus owned land. It's gonna be a fixed cost. So that land is, on a per unit scale, based on how many animals you have on it or for how long you have that leased ground for. Housing, the cost of keeping machinery and equipment used in the production of enterprise products projected from the effects of weather. So, you could get down to pretty detailed, if your equipment's sitting outside, you might depreciate it at a faster rate than whether it was inside. You could probably do that. That's getting pretty particular, but typically what you do for a piece of machinery is it has a useful life and then it has a salvage value at the end of it. So you've got its purchase value, you've got 15 years of useful life, and then at the end, you've got a salvage value, and you depreciate those years equally across the value from when it initially was purchased to its salvage value. That's in depreciation, but, if machinery not kept in a building, houses, housing represents the cost of exposure to the elements. Insurance, the cost of insuring the farm ranch assets used in the production of the enterprise products from loss. Loss can be a result from theft, fire, vandalism, maybe flooding. So depreciation, like I mentioned, represents the decrease in value of the farm ranch assets used in the production of enterprise products due to wear, age, and obsolescence. So what other things would depreciate? We talked about animals, talked about equipment.
Buildings depreciate.
Yeah, yeah, they don't last forever, do they, without maintenance? A longer time frame typically, you know, but.
Okay.
So long-term interest, charges represent the cost of capital invested in the assets needed in the production of the enterprise budgets. Maybe that's a piece of land, you've got a long-term note on that piece of land versus like a machinery loan. So those are gonna be in those fixed costs, you're gonna pay them, you know, as long as you own that piece of equipment or piece of land, the bank's gonna want your payment. So that's a fixed cost. Okay. Next survey question. Which enterprise analytics issue do you find most challenging? We talked about a few things. Are any of those points popping out to anybody or concerned about? Say, hey, that's why I'm hesitant to dig deep into my enterprise.
Probably C, cause you're trying to figure out, you know,
What goes
the
where.
percentage of the sheep enterprise
Yeah.
translates to the percentage of the grazing on the
Yeah.
hayfield, to the percentage of the beef cleaning up the cornfield after you harvested the
Yeah.
corn, you know, that kinda figuring.
I'd say D, organizing the data.
Okay, good. Anybody else? All the above? That's me.
I think interpreting the results,
Okay,
trying to figure out, I got this data, now what do I do with it? Cost comparison.
yeah. Another confusing thing I'd like to talk about, if you've got, so say you produce hay and you feed your own hay through your livestock. Do you charge yourself for the hay your livestock are eating? How do you value that hay?
Probably fair market value, cause if you had to go out and buy $6 a bale, you know,
Exactly.
what's the difference if you had to go out and buy it cause a crop failed or something?
Yep, that's exactly right. Yep. So to be correct, if you're gonna put that in an enterprise budget, cause the alternative is I can go to the open market and sell my hay at market price. But I'm choosing to feed it through my livestock, technically charging or buying from my alfalfa enterprise to feed through my cattle.
You're saying we should get a little more particular about keeping track of our books?
You wanna know how much money you're really losing?
Yeah, yeah. I think it helps to understand those costs and realize, you know,
Yeah.
and part of it is identifying, well, why am I not more profitable in my farm flock operation? What is it? Is it my labor? Is it my input cost? Am I spending way too much on feed? How can I adjust my feed costs?
I was just visiting with some people about calving barn cameras, and yeah, everybody has their own choice on how often they check and whether they check at night and whether they're, you know, they don't mind sleeping through the night and just dealing with the losses in the morning. And but we were just talking about how nice they are that you don't. I mean, around the clock, ranchers, farmers are getting up through the winter.
Yeah,
And it's not just, I don't know, you could probably value 3 a.m. to 4 a.m. as more valuable time than 3 p.m. to 4 p.m. because it's causing stress with sleep and all of that. And so to have a camera that you don't, boy, I don't just have to like clockwork, put on all my clothes, go down and
Yeah.
watch. So I mean, what things can we add to our operation that makes things easier, saves time?
Yeah, exactly.
You don't have to drive 20, 15 miles out to the stock tank to see if there's water. You can use a camera or some kind of sensor on your phone.
I think that's brilliant.
That's a really,
Or maybe drones, you know, check your fences or far out well.
okay, I'm getting a 5-minute warning, so. So this is an example enterprise budget that, I mean, if you go into Right Risk, or, I mean, this is something too that if you have access to Excel or, any type of program like that, you can do this. Like I said, the hardest part is getting started, right? Cause it's intimidating. It's like, man, I gotta think back to when I bought that hay, or what did I pay that vet, or how long did I have those animals out on that piece of ground? So it's intimidating. This is just one example of, that John put together. And it's broken out in categories just like we talked about, variable costs. This is his alfalfa business, so he's got it on probably a yearly basis, I would guess. But down to pretty detailed, you can see labor for running certain machinery throughout the year.
So Brian, does he have any tools to be putting in your hours and what enterprise you're doing during the day? I mean, cause,
Yeah.
I mean, I guess at night you could do it, but I mean even like when I work at the conservation district, I have different grants and I just need to keep track of my, what I'm, how many hours I'm spending on this or that. If there's some tool on your phone that you could, that's why I'm saying, collecting all this data, when you're busy doing it, you're not
Yeah, you're not
Think-
thinking about it.
thinking about it or recording it.
Yeah.
Yeah, a phone app, you could kind of keep track of your day,
Right.
it's spectacular.
Yeah. I know we've done some Google Docs, that then could link up to your computer, like as you get back to the house or something, it would then copy that sheet back to a Google Doc. That's one option. It's, yeah. That might be your multi-million-dollar idea. So data entry, some of the things you would have to think about if you're gonna go into Right Risk and do this, your cash expenses, other expenses.
Now, non-cash expenses, can you give me some examples of what are considered non-cash expenses?
Yeah.
I mean, other than my personal time, energy, and nap schedule. What would be a non-cash expense?
See, that could be, you could think about that being like, maybe depreciation, right?
Yeah, but depreciation translates into numbers on a math sheet.
But it's not something that you're technically thinking about putting on like as per input, you know, or per unit, like per unit of feet per head or
It's
something.
not going through the bank.
Yeah.
Yeah, that's what
Definition.
is a non-cash expense?
So things that aren't gonna be directly tied to like a per unit basis. So it's like I'm feeding per head or whatever.
So maybe like reuse T-posts you bought 10 years ago?
Yeah,
Okay.
you could kinda get into the weeds about that too, if you're
Yeah.
really particular, cause again, opportunity cost is I could go sell those posts. So, think about it like depreciation, things that you don't really think about putting a cash value on, maybe interest.
Okay.
Okay, so, I know we're on a really short time. So this is one of his tools, and he's got on there, it's free, Enterprise Risk Analyzer, tool design to evaluate enterprise profitability. He's got cash only, cash and non-cash. It'll return, net return analysis, break-even analysis, which can be, I think break-even is most valuable when you're trying to look at making individual decisions. So if I invest in this piece of equipment or buy those 10 used, what price do I have to receive on the other end based on what inputs I put into it to break even? He's got some break even analysis.
Does that analysis, have a time factor, like, you know, how many years will it take
Yeah,
those young
exactly.
ewes to
Yep.
pay off, kind of thing?
typically they're either in, I mean, and you can kind of finagle the programs to kind of spit out what you want based on what you put in it.
Mhm.
So if you put in prices, then your end is, I'm just trying to think of an example. But exactly, so you could say, if I have my hay custom cut by somebody, and the alternative is to buy a swather and a baler myself. By the time I am paying somebody to do that labor, using their equipment, how long would it take me to pay off the equipment I purchased? That's one break.
Yeah, that's what I was
break
wondering,
even
if it has a
example.
time factor in it.
So I encourage you to go check out his website. You've got the handout. You can see other tools he's got. That's probably the one you're talking about right there. Machine risk calculator. Enterprise risk analyzer. A lot of risk, which we deal with every day. So, okay. Closing up real quick. The presentation on enterprise analytics was useful to me. Does anybody care to
Completely agree.
skewer me
Yeah.
or? Okay, EE,
E.
okay, E, okay.
E.
You don't have to be nice, I mean.
This is where the anonymous part.
That's exactly right, it says like, loser. Okay. And the last one, I intend to apply something I learned in the enterprise analytics session.
E.
Okay.
C.
C. Somebody had to do it.
I use QuickBooks for my enterprise,
Yeah.
and that's, I probably need to learn more of the analytic
Yeah.
comparison charting things better. Like track everything, I'm pretty good about tracking everything, but then doing the comparisons at the end of the year, I get sort of,
I think there are some valuable tools in there to evaluate your cost for sure.
yeah,
To look at what you're spending and where.
yeah.
But another program John's involved with and the Ag Econ department is involved with is this growing, beginning farmers and ranchers. So it's an internship program. This is I think this will be the third year they've done it. They've had some good luck with it, but it's basically placing interns in agreeable partners operations and helping producers, new producers, interested producers, maybe people that have come from a non-farm or ranch background, get some exposure and experience in agriculture. If you have any interest in this, I think it's on this handout as well. It's a neat program. Yeah, it's on the back. They do have a website there, and John's information is there. You can find him at hewlett.uwio.edu, or if you have any questions for me, if you have an idea, a specific idea you wanna think about, maybe a change to the operation, we can work through partial budget and get a starting point. But
Great.
I'm pretty much available, and so is John, so,
Thank you.
thank you.
Just a quick plug, Brian, I'll do for that growing program. If you're looking to wanna mentor somebody and have some labor where you can teach them along the way, that growing program's a good way to do it, because it pays a stipend to the student and you're just mentoring the student. And so basically you're teaching them how to live on a farm or a ranch operation. So it's worth reaching out to. John or Ben Rashford too, who's the other person listed, I think, on there too, about that. It's because you don't have to pay for that part, but you are, for lack of better words, you are babysitting somebody, so just know that. But talk to them about it if it's something on your radar.
I think kind of I don't know if it's a reaction or to address a need of, getting more young people
It
into
is.
ag and
Yeah.
people that are interested in ag that don't have an opportunity, so.
Great.
Okay, thank you.